down about 50 odd points on the Nifty. It's a cut of 0.2%.
Let's look at the Nifty winners, and you'll find a lot of these festive stocks.
Been a very, very quiet session so far.
It's a slightly down day. 38-40 points down, 20,154.
We are closing with the Nifty, looking at a 70-point cut, 20,122.
Hello and welcome to Markets Today, the show we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. The Sensex and the Nifty end with minor cuts after a range-bound session. The Nifty manages to stay above the 20,100 mark. Financials see profit-taking. Tata Steel loses in trade, ends down close to under % after it announced a £1.25 billion investment plan with the UK government for a green steel making facility at Port Talbot. This includes £500 million grant from the UK government. Stocks of defence vendors, they pick up. This as the Defence Acquisition Council approves 9 procurement proposals worth nearly 45,000 crore rupees. This includes procurement of 12 Su-30 MKI fighter jets manufactured by Hindustan Aeronautics. The PSU Banking Index, that rallies more than 3%. Market capitalization crosses 12 lakh crore rupees. Shares of public sector banks soar ahead of the festive season as lenders like Bank of Baroda look to clock industry-beating growth with special offers.
For all the Pulsar fans out there, we have plans to launch the biggest Pulsar ever.
Bajaj Auto MD Rajiv Bajaj hints at launching the world's first CNG bike in the 100cc segment. The company gets ready to launch 7 new Pulsars and double electric two-wheeler production to 15,000 per month by the end of FY24. Well, here's what we have lined up on the show for you. It's a power-packed one as always. In Market Opinion, we have Andrew Holland of Avendus Alternate Strategies. In Big Corporate Voices, we have Mr. Rajiv Bajaj, Managing Director at Bajaj Auto. Well, before we get to all that, let's get straight to the first headline today and the day's market action. A range-bound session saw the Dalal Street ending with minor cuts. The Nifty and the Sensex closed 0.25% lower. However, the Nifty managed to end above the 20,100 mark. The Nifty Bank and the mid-cap index, they underperformed the blue chips, but the PSU Banks were the star performers as the index soared over 3%. Prashant Nair joins us to fill us in with more details. Prashant?
Well, we started the day with pretty negative global cues. Nasdaq on Friday was down sharply. The dollar index was higher. And of course, oil was near $94 a barrel. So far, markets had ignored it. But I reckon a mix of factors, the negative global cues and, of course, the fact that tomorrow is a market holiday, also and lesser market volumes in that sense, put overall pressure. So we ended lower, the Nifty by about 1/3%. The Bank Nifty was down a little bit more, a little over 0.5% or so in terms of cut. The broader markets also were lackluster. You look at the mid and small cap indices up on your screen and it'll give you a sense of what really happened there. Now, gains coming through on the large caps, Nifty names and Power Grid, Titan, which did well, HDFC Life, Mahindra & Mahindra, and BPCL. So no real one sector either up or down, which did well or poorly. On the downside, Hindalco, HDFC Bank, and Adani Ports were some names which lost. PSU Banks did very well. So Indian Overseas Bank, UCO Bank, Central Bank, Bank of Maharashtra, IDBI, Indian Bank, just a few names to give you a sense of the kind of moves we saw. By the way, in the last 30 minutes, PSU Bank index came off 1.5% from the day's high, but it still ended about 3% higher. Now, pullbacks in the broader market as well. The market breadth was negative. So IRFC, Idea, which had been going up on all kinds of news flows floating around, buzz floating around rather, that pulled back. Fact was down, GNFC, some of these fertilizer names. Raymond was down sharply. Syngene, Bombay Dyeing, Star Health, Jayaprakash Associates, which has done well recently. Jupiter Wagons, again, a big outperformer. PNB Housing, some of these names which came under pressure. On the upside, in the broader space, you had Ease My Trip, Panacea Biotech was higher, Tata Investment Corp, Ramco Systems, Varroc Engineering, Barbecue Nation, and something like a Sundaram Finance did well. So, that's the market action for you. Tomorrow is a holiday. Wednesday, of course, we come back to trade. And then Wednesday evening, you get the Fed meeting to which we will react on Thursday morning. So in that sense, really, the market will be all eyes, waiting for that Fed decision to get a clear sense of the near term from here. Back to you.
Thanks a lot for that, Prashant. Well, moving to market opinion then, Andrew Holland, Chief Executive Officer at Ventus Capital Public Markets Alternative Strategies, believes that PSU Banks are a good investment option for the short-term basis. Let's listen in to what he had to tell us.
We've always had this view that, when the banking sector has a run, then the PSU banks will surely follow. But it's a sector or subsector which we've always said, for many years, that it's an area we'd like to rent and not own, on a long-term basis. So, when you have these kind of runs in the banking sector, then PSU banks would be a good trading side of making money, but not for a long term, not on a long term view.
Well, moving to the second headline now. Shares of Tata Steel, well, they were ended lower in trade today. The company has announced a £1.25 billion investment plan with the UK government for green steel making facility at their Port Talbot. The package includes 500 million grant from the UK government as well. So that's the big news that came in post-market hours on Friday. So let's explain this to you. But before we get to the deal, let's brief you about the significance of Tata Steel's UK unit. They have a large share in the UK steel market. So in that case, they had some bargaining power. This Tata Steel UK unit, well, it accounts for roughly around 14% of Tata Steel's total capacity. The unit, though, has been profitable only twice in the last many years, and the cumulative losses that it has is nearly around $2 billion. Now, Tata Steel and the UK government, they've jointly agreed on their investment proposal, and so they have planned to invest in a 3 million ton EAF steel capacity. The restructuring plan will entail a cost of around £1.25 billion, of which the Tatas will bear 60%, while the UK government will bear close to around 40%. The reasons for this revamp was the existing asset, well, it was reaching end of life, and so it had turned operationally uncompetitive. It's also a step towards decarbonization, given the lower carbon footprint of EAF-based plants that compares with the existing blast furnace facility. Now, the key benefits of this capex, well, it will flow through in the coming years as it transforms the UK unit into a sustainable, capital-efficient, and profitable business as well. It'll help reduce the direct carbon emissions by 50 million tons over the decade. And the Tata Steel management, they've also said that they expect to see 150 to 170 pounds per ton of steel saving, owing to the reduction in employee cost as well as carbon cost. Now, the deal is expected to get all approvals, and it should ultimately get commissioned within the next 3 years or so. Moving to what brokerages are making of it, ICICI Securities, they believe the deal is very significant as support from the parent from UK operations will reduce in the future. So they peg an incremental value of 10 to 16 rupees per share, assuming different cost-saving potential. They also raise the valuation multiple, and so the target price moves up. Jefferies believes, though, this investment is a missed opportunity to reduce its exposure to historically high-cost, low-margin geography. They also say that Tata's share of the investment implies cash outflow of around $230 million per year for around 4 years. They continue with their buy rating, though, with the target price of 145 rupees per share. And finally, Axis Capital, they say several loose ends still remain unresolved, particularly the stress on the employee restructuring cost, which according to them could work out to roughly around 300 million pounds. So that's why they have a reduced rating with a target price of around 112 rupees per share. So that's about Tata Steel and that big deal that was announced. Well, moving on then, the third headline today, shares of defense firms like Hindustan Aeronautics as well as Bharat Electronics, well, they rallied in trade after the government approved defense purchases worth 45,000 crore rupees. Vivek Iyer joins us to fill us in with details on that front. Vivek?
Well, absolutely. So one more round of news flow coming in as far as the Defence Acquisition Council is concerned. So over the weekend, post-market hours on Friday, the Defence Acquisition Council has approved the acceptance of necessity for procurement of further weapons as well as aircraft, as well as some of the components that are required as far as the entire defense space is concerned. And on the back of that, the total size of all of these opportunity is close to 45,000 crore. So on the back of this opportunity, a lot of the defense stocks are buzzing. Why are we highlighting HAL? Because, the company is present in two of, the two components where the DAC has actually made this particular approval. Number one, 12 Su-30 MKI aircraft, and along with that, the Defence Acquisition Council has also gone ahead and approved the upgradation of Dornier aircraft as well. So both of these benefit HAL. Now coming to Bharat Electronics, the company has gone ahead and given an update to the exchanges on various order wins that the company has received. So total order wins of over 3,000 crore. Company number one has received orders of over 2,100 crore from Cochin Shipyard. This is for supply of various equipment consisting of sensors as well as weapons. And additionally, the company has received orders worth over 880 crore. This is from other segments. So in FY24 alone, BL has received total order inflows of over 14,300 crore, which is quite strong at this time of the year.
Thanks a lot for that, Vivek. Well, let's move on. Shares of Jupiter Lifeline Hospitals made a strong debut on the Lal Street. The stock listed at a 32% premium in comparison to its IPO price. Ekta is with us to fill us in with more details on that front. Ekta?
Well, definitely a strong listing for Jupiter Hospitals. It was subscribed totally by over 60 odd times, QIB over 180 odd times, NII 36 odd times. They raised around 261 crores from anchor investors as well, around 39 entities. Now, it is a multi-speciality hospital which is focused in the micro markets of the Mumbai metropolitan area and the western region. So the hospitals each are in Thane, Pune and Indore, and they have a bed capacity of around 1,194 odd beds. Now, in terms of the overall moat for Jupiter Hospitals is that the company is going to be debt-free post the IPO. So they are going to be looking to repay debt. They have around 476 crores of debt on their books. They are also increasing their focus on the micro markets because they are setting up a multi-speciality hospital in Dombivli. So remember, to put it into perspective, there are 10 beds per 10,000 people currently within that area, and hence the expectation is that they would probably be able to tap further into these micro markets. In fact, they're looking to increase their bed count to around 2,500 in the next couple of years. In FY23, the patient volume was up around 20 odd percent. In terms of occupancies, it stands at around 63 odd percent. They said that 80 to 85% is a sustainable basis. And however, when it comes to average revenue per occupied bed, they would be more sensitive when it comes to that parameter simply based on the geographic locations that they do operate in. Overall, revenue growth was 22% in FY23 and the margins came in at around 23 odd percent. In terms of the valuations, it's on a FY23 trailing basis, it's at around 21-22 times EV to EBITDA. It's a little more expensive than a couple of its listed peers.
Thanks a lot for that, Ekta. For the time being, we'll slip into a short break. When we're back, we'll run you through the remainder of the headlines that we're tracking for you. Welcome back. You're still with us on Markets Today. Well, as promised, let's run you through the remainder of the headlines that we're tracking for you, which brings us to the fourth headline today. Public sector banks, they perked up ahead of the festive season as lenders like Bank of Baroda look to clock industry-beating growth with special offers. This even as the margins and credit costs remain stable. The PSU Banking Index soared over 3% and crossed a market capitalization of over 12 lakh crore rupees. Abhishek Kothari, he's standing by to fill us in with more details, the key drivers, as well as the complete valuation picture of this space. Abhishek.
Well, to begin with, PSU banks have been the favorites of investors over the last 1 year or last few quarters. So let's take a look at the fundamentals of PSU banks over the last 1 year. Now, take a look at the loan growth. PSU banks have seen a significant loan growth of about 11.78 lakh crore on the incremental side over the last 1 year. So amongst PSU banks in last 1 year, what you have seen is that many have seen their asset quality being best in many years. Gross NPA ratio has declined for all the PSU banks combined by about 277 basis points over the last 1 year. It's declined from 7.52% in Q1 FY23 to about 4.76% in Q1 FY24. In terms of value-wise, the gross NPA decline has been around 27% on a YY basis. Now, PSU banks have managed to reduce their quarterly slippages by about 31.5% YOY. So the annualized quarterly slippage ratio has decreased to about 1.3% in Q1 FY24 FY24 when compared to 2.17% on a YOY basis. Take a look at the restructured book. PSU banks have reduced the restructured book in value-wise by about a little more than 28% YOY. So PSU banks have witnessed significant growth in their operating profits due to reduction in the stress, with a YOY increase of about 55.5% in Q1 FY24. PAT has grown substantially as well by about 124.5% YOY. So this has helped the return ratios to improve a lot for the PSU banks on a YOY basis. However, PAT appears to be almost flat on a sequential basis, that is Q1 FY24 versus Q4 FY23. It's important to note that these positive trends in loan growth, asset quality and profitability are generally indicative of an improving financial health of PSU banks. Now, many PSU banks have experienced significant gains in their valuations over the last 1 year, largely led by improving fundamentals of the PSU banks and the cheap valuations earlier. So top performers, if you take a look on a YOY basis, is UCO Bank, Central Bank of India, Indian Overseas Bank and Bank of Maharashtra, who have seen their valuations more than double over the last 1 year. Now, SBI's valuation have actually declined, or it is the only PSU banks to witness a decline in valuation on a YOY basis. So, year on year, SBI's valuation have actually slipped a bit when compared to same time last year. Amongst PSU banks who have lost on, gain majority on the price wise is Indian Overseas Bank and UCO Bank. Currently, the most expensive valuations have been of these banks. Cheapest valuations, Punjab National Bank, Union Bank of India and Canara Bank, they are the ones who have the cheapest valuations amongst PSU banks. Interestingly, as of today, IOB, that is Indian Overseas Bank market capitalization, is higher than that of PNB. If you take a look at their loan book size, IOB has a loan book of just rupees 1.8 lakh crore, while PNB has a substantially higher loan book size of about 8.6 lakh crore. Now, some of the top holdings by Government of India in PSU banks are IOB at 96%, UCO Bank at 95%, Central Bank of India at about 93% and Bank of Maharashtra at 86%. So free float in some of these PSU banks are on the lower side. Back to you.
Thanks a lot for that. Yes, Abhishek, that free float factor as well should be something that your investors and viewers should keep an eye out on. But sticking with our theme, Bank of Baroda will rally close to 3% after they unveiled a new festive campaign. Mr. Joydeep Datta Roy, Executive Director at the bank, says that their retail segment is getting maximum traction. Let's hear out what he had to tell us earlier today.
Maximum traction, of course, is in the retail segment. So we have been growing at around plus 20% levels over the last couple of years. Actually, that's above industry. The industry has been growing retail at around even 20% levels in the industry. Also, we have grown almost 3 to 4% higher than industry. So from that perspective, I think we think we would be able to continue that sort of a momentum as far as the retail space is concerned. That's the fastest growing segment as I look at it, even for our bank. Unsecured loan for us, of course, is the highest growing in terms of percentage terms, but I think we are at a lower base.
Well, moving to the fifth headline today, Bajaj Auto's MD, Mr. Rajiv Bajaj, has hinted at the launch of what would be the world's first CNG motorcycle. Speaking of CNBC-TV18, Bajaj said the company's CNG bike launch could be a disruptor in the 100cc segment, where the company has lagged. He added that 6 significantly upgraded Pulsars would be launched this year. Bajaj also announced the launch of what he called the biggest ever Pulsar. Let's hear him out.
For all the Pulsar fans out there, we have plans to launch the biggest Pulsar ever. So currently the biggest Pulsar is the 250cc. Between now and the end of the financial year, over the next 6 months, we would introduce 6 significant upgrades or new Pulsars, all aimed, quite frankly, at further enhancing our share in this mid segment from 30% to, as much as it can rise. We would certainly like to vie for the #1 spot in this position. Why aren't there any CNG scooters and motorcycles? It would be great for consumers because It would cut their running costs by half. So it's like petrol becoming effectively 55 rupees a litre. There would be no concerns about safety, charging range, battery life, etc. Great for the manufacturer and great for the government because you make 18% GST. The 100cc has been very elusive, and who knows, maybe a CNG Bajaj motorcycle that halves people's running costs would be the answer with a little help from the government.
Well, JSW Infra is looking to raise 2,800 crore rupees from its IPO. The company's initial public offering will open on the 25th of September. Joint MD and CEO Arun Maheshwari told CNBC-TV18 that proceeds from the IPO would be used in debt repayment as well as for their capex plans. He said they have placed bids for acquisition of identified assets worth 2,000 crore rupees. Let's hear him out.
Out of this total 2,800 crore rupees, we have a partial gets into the debt repayment, about close to about 880 crore rupees. And 1,200 crore rupees goes towards the capex plans, what we have already identified, and we are going ahead with that. And balance remains the general corporate purpose. So whatever bidding we have done, I believe the total addition of the capacity, assuming all three we win, then it could be a decent, almost about 10 to 12% of the addition of the capacity would be there from the existing ones. And the capexes would be close to about 2,000 crore rupees from this for the new biddings.
So watch out for that IPO as well. But on that note, we'll have to wrap up on this edition of Markets Today. You stay tuned for more news and updates.